This episode is intended exclusively to provide information and education to help individuals better understand cycles. However, this information is not be construed as professional advice as to the buying and selling of securities or other investment instruments. In no event does the host express any opinion with respect to or make recommendations regarding the purchase or sale of any particular investment instrument. There is a very high degree of risk involved in trading securities. Buying and selling decisions are solely within the personal discretion of each individual.
From the mind of Lars von Thienen.
Moin. Hello, everyone. Nice to see you again. Let's have another episode of Cycles TV. As you know, we are getting together, if you're new to this channel, to do some dynamic time cycle analysis using the tools and techniques we provide at the Foundation for the Study of Cycles for you as members. And I will get together with you every Monday to analyze some price assets to learn something on cycle analysis, right? So therefore, today I want to review some S&P 500 sectors regarding to cycles, and in specific, I will review 4 sectors with you. So we will look at the S&P 500 financials. We will look at the S&P 500 energy. We will look at the S&P 500 real estate, and we will look at the S&P 500 materials. So 4 sectors for today. Maybe let me also explain and highlight why I think analyzing sectors is very important. And reason for doing that is I think the markets are not as simple in terms of we just analyze the S&P 500 as the overall index, and that might give us a clue. I think in these times where we see the shift from the upswing cycle, which is the long-term upswing cycle, which might come to an end during the course of 2025 now, we might see different performance and different cyclic relations in the sectors. So some sectors of the S&P might turn more early or might deviate from the global trend. So when we approach those major turning points, which are predicted by the long-term cycles, and if we then dive down into the market itself, it would be more interesting to analyze the sectors than the broad index per se. Once we are in a long-term trend again, maybe then it's more or less the same across all sectors. But I think right now we are in a period where the underlying theme might change from upward, which have been the past 2 years, to a downside. And therefore, that's the reason why I also recommend have a closer look to sectors instead of just the broader index. Okay? And said that, let's start with the long-term cycle, which I'm showing here for a long time. And that's the reason why I would highlight analyzing individual sectors here. As you can see, the long-term cycle, this is a weekly chart now on the S&P 500. So this is a weekly long-term chart on the S&P 500. And I've often referred that the 180-week cycle, which is this peak here, so it's interesting long-term cycle, 180 weeks. It's close to the 40 months cycle, which is very prominent also in Dewey's work. We spoke a lot of times here. And this cycle is now rolling over. So that's why I said during those times when a long-term cycle seems to change the trend for the underlying market, you will not see this right on the long-term trend on every stock, on every sector. This will take some time until this major trend shift will switch into the markets. Therefore, it is important to have a closer look at each sector. Okay, enough upfront. Let's start with the financials. So here we have the S&P 500 financials, which just is sitting here on the all-time high for the past 3 weeks. And what we see in the spectrum are two interesting cycles here. Let's turn them off for now, which is here the 174 days. So now we move to the daily chart, 174 days. And the second longer term one is 254 days, which that cycle here seems to roll over now from the daily analysis. And if we have a look at the second possible cycle, which has rolled over at the previous top here from end of November. So that's interesting. That cycle here topped end November with that one, and the longer term one is topping now. So that's maybe if you plot them separately, you will see one top here and one top here are related to those cycles. Yeah, that's the single tops here. That's maybe why you can see a double top in the markets. And if we stack them up into a composite, so now you see the composite here. The composite is turning in the center, but I think now you understand that we have one cycle more topping to the left, and the other cycle is more topping to the right. No? So 174 topping here, 254 topping here, the composite. It's really showing up as one cycle. It is not one cycle. This is a composite of two cycles, but they are now rolling over, which gives us a possible downward projection into April, May now for the financials here. Always interesting to add the technical situation here. So it's interesting here we had a classical sell signal here at the point of the time from the previous first cycle, 174. So that was on time, and now we see a forming divergence here, between price and indicator, and you know that we have the secondary cycle top here. So I think that would be a nice confirmation of now seeing two cycles pointing to the downside. By the way, as I've told you, in alignment with the long-term cycle of the S&P 500 in general. So that's the S&P 500 financials, cyclic situation, and technical condition with two major cycles. Let's move to another sector, which is the energy sector. So let's now look at cycles in the S&P 500 energy sector. Again, here is the chart. Let's bring it in. Here we have now the S&P 500 energy. So quite boring if we say you see that behavior. But anyhow, if you would zoom in, so let's do that. You see there might be some nice swings on the short-term perspective, which could be interesting. Let's first look at the cycles before anything else. So let's see, even if we have a sideways movement, if there's interesting cycles at work. And here we have a very interesting peak at 174. Maybe you remember we saw the same peak in the financials. So 174 days is now also a cycle very prominent showing up in the S&P 500 energy environment. And this is an almost perfect peak here in the spectrum. So if you have a close look to the left and to the right, this one is really standing up, and the left shoulder is even going down to the bottom of the spectrum, similar to the right shoulder. And in terms of the amplitude, there's nothing else. So there's a huge offset between the second highest peak and the first highest peak. So here I would even not start to build a composite. I would just use this single cycle here. So let's activate it. And we see by design, we have a very nice fit between even the sideways movement, but within those sideways oscillation, we can see that this cycle seems to be a very stable indicator about past ups and downs going back into 2022. So we have 1, 2, 3, 4, 5 nice iterations, which are close to be perfect in that sense. And so if you zoom in here, even the price, we have some nice iterations here. What we also could do, I recommend that if you're a user of the tool, you could add the cycle highlighter, which I've just put here at the bottom. So the red line is just the same, but you see here as light blue, this is the cyclic price behavior. And if you have a match between the light blue and the red, you can see that there's real rhythmic behavior in price related to that cycle. It's the same as trying to visually plot those or connect those bottoms and tops here and then draw your conclusion visually. This is all done with the cycle highlighter here. If you just see if you have a high correlation between red and blue. So there are no phase shifts and no amplitude shifts in price and those theoretical cycle. Okay, said that, we have one very interesting cycle now in the S&P 500 energy, which is also currently topping, rolling over to the downside into April. Let's now also see the technicals related to that, if we can get any clue using that cycle. Yeah, it's not really giving any, it's somewhere in the middle. So technical indicator here will not give us any additional clue on that here. Okay, but that's the energy. So at least you will see that the 174 day cycles has been found in financials and in energy, which gives more confidence on that cycle. Let's now move to the S&P 500 real estate. Okay, S&P 500 real estate. Here we are. Let's remove everything first. This is the S&P 500 real estate data. So we see also the top here in September or the peak here in November, but we didn't made another all-time high. So this is quite declining and moving down. Here the spectrum looks a lot more complicated. So it's not as easy to see here which cycles could be interesting. So that's also an interesting learning. Spectrums are not always as easy as we've seen in the S&P 500 energy sector. So here it's quite harder to identify any valuable cycle. Maybe it's even impossible to really derive any valid cycle out of that spectrum here. But let's see if we can find one. I mean, for sure, in the upper right, you will see that our ranking algorithm helps us to identify. So this automatic mechanism would indicate that the cycle with a length of 82 days, which is this one here, would be the most important one. And the second important one would be the length with 135, which is this one here. And then other cycles come into play, but they have quite the same high, and the separation to the left and to the right in that spectrum is not as good. So let's start with 82. By the way, this could be harmonic relation to the 170-day cycle. 82 multiplied by 2 is close to 170. Not sure, but at least one observation. And let's see, I will not plot now the visual confirmation. I will directly jump to our cycle highlighter here at the bottom to cross-check if that cycle is in tune with price movements. And here we can identify it's not as perfect and clean as would we like. So here we have the amplitude is off. Here the phase is completely off. So price is making a top while cycle is making a bottom. So here in the past we have a huge phase shift here. So that bottom, this is the cycle bottom is here, price bottom is here. So this is a phase shift. Let me explain. Here we have a huge phase shift. Same phase shift can be seen here. Here we have an amplitude shift, or even the cycle is subdued because the amplitude is quite low. And here we have also big amplitude or even a complete phase shift here. So so during this period here in 2022, yeah, so here we have a nice fit, yeah, as you can see in that period. So here we have 3 repetitions when the cycle was on, but we have a huge of, yeah, I mean, here it is on, but then we have very high variation. Yeah, so let's call it, this is where we don't have a stable cycle in regards to phase and amplitude over time. So the variation of the cycle with the length of 82 is very high. So even it is showing up as most important cycle here in the spectrum, the peak, and in our table, as I've shown you by the cycle highlighter, we have a lot of variation in phase shifting and amplitude shifting. So I just wanted to explain you those cycle features. So mainly you look at the spectrum, the amplitude, and the prominence of that cycle in that spectrum to identify that. The other important factor is how stable is that cycle in regards to phase, timing, and amplitude. So sometimes the amplitude gets subdued, so the cycle has no influence on price anymore, and sometimes the phase shift. So instead of a top, we maybe see a bottom. So, and the more shifts you have in that cycle over time, the more invalid or it makes no sense then to use that kind of cycle for any projection, because it's very unstable, even though that cycle length is important. So that's an important step you need to see. And you see the difference if you move back in that video on the, so this is the real estate. On the energy, we saw exactly the opposite. So we had a very stable cycle with very low variation of phase and amplitude, which makes it valid for forecasting. So now here on the S&P 500 real estate, we have seen that the variation of that 82 trading days, by the way, trading day cycle, is too high. Do not use it for projection. So therefore, I would deselect the 82. The other one is then close to 135. We can do the same observation. Let's also plot the highlighter to see if we have a stable correlation. Yeah, and here we have. So this is another story. If you see here that the sync between the light blue and the red one is close to perfect with very little variation in terms of amplitude and in terms of time. So even though that cycle is not ranked as number 1 cycle, because the separation to the left and to the right is not really perfect, but the variation is very low. That's what the cycle highlighter shows. So let's turn off the cycle highlighter. So we have confirmation that that cycle over time was persistent, was stable in terms of time and amplitude. So using that cycle, this suggests that the real estate might still be in an upswing, which started here mid-December, which lasts into March, and then will conclude into a downswing. We can also add in now the technical condition which would confirm that the upswing cycle started here. We see we have a nice confirmation of that cycle length entry signal here in January. So in January, that bottom was confirmed from a technical condition, and there is enough room to move to the upside from the technical condition once that point in time comes into place. So that's my summary on the S&P 500 real estate current dominant cycle, still in the upswing cycle into mid-March. And from the technicals, still some room to go to the upside. And here you see now the difference that in this sector, so the real estate is quite in an upswing cycle into March, while the financials and the energy have been more or less in a downswing cycle. So that's why it's important to have the close look at the individual sectors, because not all sectors move in sync with the long-term weekly cycle. Okay, last but not least, we have the S&P 500 materials. So let's switch to the S&P 500 materials. Here we go. Here we have the materials. Also, we didn't make another high here. So the high was in October last year. We did already since the start of the year, but quite a lower top here. If we look at the spectrum down below, there's one cycle here popping up, 146. There's a longer term cycle, 300. Maybe this one, again, 81. So maybe you have heard that the 81 is also visible here in the S&P 500 materials. Let's start with this one. Let's also see if this is more stable here. We have seen in the real estate that cycle length had a high variation. So here we have the 81, which is also a top 3 cycle. Very high strength. Okay. So let's have a closer look now at the variation. Therefore, we turn on the info box with the cycle highlighter, which then opens here at the bottom as an indicator. We can make that larger and then zoom in. And then we monitor the behavior between the light blue and the dark red. So this is on, this is a little bit off here. So here it's on with a little bit phase shift. Yeah, you see, again, a lot of shifting here. So it's similar behavior. So we have very high phase shifts here. Price made a bottom, theoretical cycle at the top. Same here, same here. Here again, the cycle was off, or the amplitude was quite zero. So the cycle was off here in that period. I mean, here it turned on, but we have not enough confirmation. So if you go back from the current day, we only have the last iteration which was on. But then if you go back into the second and the third and the fourth iteration, they are quite off. So therefore, there is too much variation in the current history. If you go back then longer into history, so here again, as said, then this cycle has been on again. So you really can spot those times when we had low variation of phase and amplitude, and when we had high variation. But due to the fact that in past times we had too much variation of that cycle, similar to what we've seen in the energy, let's skip that one. So 81 is off the table. Again, the next one is then 146, and that's again quite similar. 146 was the same cycle we've seen on real estate. Oh, that's interesting here. So now we have something when we're doing that analysis. So 146, similar to real estate, is looking the same. Let's also make up the highlighter here. So let's do the same analysis as we did here. So here we have the cycle highlighter. You see a nice sync. Oh, very nice sync here. So here we have, again, very low variation of phase and amplitude. Very important confirmation that this is a persistent, stable cycle over the previous time, similar to as we have seen in the real estate. So let's get back to our analysis. I think we don't need the cycle highlighter again. Now we have confirmation. This cycle is also now pointing upwards into April. And you remember we have seen that cycle also on the real estate. Let's now add the technical condition to that. Here quite similar, but even better, we have a current buy signal here. So here we have right now we have the entry from the price. So this is the price technicals. This is the timing information, which could give even more room to the upside on the materials into April. So I think, and this is how you should do a cycle analysis. Just to conclude on the financials and the energy sector, we have seen the 174, by the way, trading days cycle, which is pointing downwards in those two sectors. And we have seen the 146 days cycle in the real estate and materials sector, which is pointing upwards right now. We have also seen that there is, from the spectrum perspective, an 81 days cycle. But due to the fact that the variation of phase and amplitude is too high in that cycle, it should not be used for any projection. So I think that's the main takeaway for today, analyzing 4 sectors, which is clear projection. And I mean, the main objective is for sure to learn something new. And I wanted to emphasize that if you see similar cycles in similar sectors, you have even more confirmation that those cycles might play an important role. You also see that there are different cycles in different sectors. Just because the S&P 500 weekly long-term cycle is now rolling to the downside does not mean everything needs to be down. That might also be a reason why we see sideways movements in the S&P 500 total, while now some sectors like the financials and the energy turning downward cycle even on the daily, but real estate, materials now still pointing upwards. So we have not conflicting, but in those sectors, those cycles are different. So in the S&P 500, we just see the composite, maybe just sideways, while the sectors behave differently. And that's, last but not least, to close today's session, it is important in those times when we expect a major shift in the fundamental long-term cycles, that you will see this step by step in individual sectors, but not in each sector at the same point in time. Cycles will turn at different points in time in those sectors. I hope you got something out of this session. Yeah, if you want, we can have a look at your questions. So let me see if I can pull up some of your questions quite quickly. So, Ben, is it a 174 calendar days or trading days? It's trading days. We are pulling off here the trading days chart. So it's also related then to trading days, not calendar days. You could adjust this in the tool, but I have used trading days for now. Bruno, I think I did that right. So I explained that the 82-day cycle in real estate does not really make sense, but I also showed you that the cycle with the length of, no, it was 100, that was not 146. So sorry for that, but I showed you that we had the cycle with 135 days. So close to 140. So in the materials, we had 136. In the real estate, we had 135. So I took a little bit more time. So, Bruno, but yeah, you saw it. So all good. Okay. Yeah, I think these are the main questions just related to what I've shown here. I don't want to comment on Bitcoin yet. We need to do another session on Bitcoin. I think it's still valid what I showed, so there's no variation in my forecast I did on that. And the tech sector, I would leave it now up to you. Log into our cycle analyzer, open the tech sector for the S&P 500. And see what this cycle is telling us. So, and by the way, we're just doing this forecast here for education, and I'm doing very simplistic, basic features and basic knowledge how to derive which cycle could be useful and which cycle could not be useful For sure, this is not any advice or trading strategy, but I hope that's clear anyhow. Yeah, said that, I hope you like that session. Please subscribe, tell your friend, join next time, join tomorrow our other sessions from my colleagues, and I hope to see you soon again here on the channel. Have a nice week. See you soon. Bye.